people know they should be investing, but knowing and actually doing are two completely different things. And the gap between those two things usually comes down to one thing: not knowing where to start. What do I buy? How much do I need? What if I lose money? What if I pick the wrong stock? Those are questions that keep a lot of people on the sidelines for years. And every year they wait, it's a year their money is not growing. I'm Alex, aka your money friend, and in this video, I'm gonna be changing that. I'm gonna walk you through exactly how to start investing in stocks on public.com in 2026. So with that said, let's get into the video. Look, before you invest, get this. Before we talk about stocks, there is one thing you need to have in place first: an emergency fund. An emergency fund is money set aside specifically for unexpected expenses, car repairs, medical bills, job loss, anything that comes out of nowhere. The general rule to have is 3 to 6 months of essential expenses saved up before you start investing. And here's why this matters. If you invest money and then an emergency hits, you might be forced to sell your investments at the wrong time just to cover expenses. Markets go up and down. If you sell during a down period, you lock in a loss that you did not have to take. Having an emergency fund means your investments can stay invested through the ups and downs without you having to touch them. That is how you actually build wealth over time. Once this is in place, you are ready to start investing. So why public.com for stocks? There are a lot of platforms you could use to invest in stocks. So why public.com specifically? A few reasons. First, every trade is completely free. Yeah, you heard me say it. Completely free. No commission means no fee every time you buy or sell a stock or ETF. And that matters a lot when you are starting with a small amount of money, because fees can eat into your returns quickly. Second, you can start with as little as $1 through fractional shares. A fractional share is simply a piece of a full share. So if a stock costs $300 per share and you only have $50 to invest, you can still own a portion of it. This removes the barrier of needing a lot of money to get started. Third is public.com has a built-in AI research tool called Alpha. It is powered by GPT-4 and it is completely free for all public.com users. You can ask it questions about any stock, get earnings, call breakdowns, understand why a stock is moving, and get real-time insights on the market. So for a beginner who is still learning how to research investments, this is a genuinely powerful tool to have built right into the platform itself. Fourth is the social investing feature. Lets you see what other investors on the platform are buying and follow their reasoning. So for someone who's still figuring out how to think about the market, being able to see how experienced investors approach their decisions is a real advantage. And the fifth is public.com has a high yield cash account that pays 3.3% APY on any uninvested cash as of April 2026. So even while you're deciding what to buy, your money is earning rather than just sitting there idle. Understanding stocks and ETFs. Before you place your first trade, let us make sure you understand what you're actually buying. A stock is a ownership in a company. When you buy a share of Apple, you own a tiny piece of Apple. If Apple grows and becomes more valuable, your share becomes more valuable too. If Apple struggles, your share loses value. Individual stocks can be exciting, but they are also riskier. If you put all your money into one company and that company has a bad year, your whole portfolio takes a hit. That is where ETFs come in. An ETF stands for Exchange Traded Fund. It is basically a basket of stocks bundled together into one investment. Instead of buying one company, you are buying a small piece of many companies at once. And this automatically spreads your risk across multiple businesses and industries. For most beginners, starting with ETFs before individual stocks is the smarter move. How to think about what to buy. And here is a simple framework to start with. Start broad before going specific. A broad market ETF that tracks the overall US stock market of the S&P 500 is one of the most beginner-friendly starting points available. You are not betting on one company or one sector, you are betting on the overall growth of the US economy over time. Historically, that has been a reliable long-term bet. One ETF worth looking at is SCHD. You can go ahead and see it right here on public.com itself. You'll see that you'll be able to buy and sell this as well if you have buying power in your account, which means you make a deposit into your account so that you can trade. So you can see everything about this ETF right here. It holds over 100 stocks and has delivered an average annual return of around 12.9% since its inception in 2011 and pays regular dividends. Dividends are cash payments that companies send to their investors on a regular schedule. Usually it's every quarter. So you are getting both potential price price growth and regular income from the same investment. Another option is a simple S&P 500 index fund. These track the 500 largest US companies and have historically delivered strong long-term returns with very low fees. Once you are comfortable with ETFs and understand how the market works, you can start adding individual stocks to your portfolio if you want. How much to invest and how often? This is where a lot of beginners overthink. The honest answer is that the amount matters less than the consistency. Starting with $50 a month is better than waiting until you have $5,000 saved up, because the longer you wait, the more time you lose, and time in the market is one of the most powerful forces in investing. A strategy called dollar cost averaging is one of the most beginner-friendly approaches available. And here's how it works. Instead of trying to time the market and buy at the perfect moment, you invest a fixed amount on a regular schedule, regardless of what the market is doing. When the prices are high, your fixed amount buys fewer shares. When prices are low, your fixed amount buys more shares. Over time, this averages out your cost per share and removes the stress of trying to predict market movements. Public.com lets you set up automatic reoccurring investments, so this happens without you having to manually place a trade every time. Understanding risk. Now, let me be honest, every investment carries some level of risk. Understanding that upfront will save you a lot of stress down the road. Stock prices go up and down, and to be honest, sometimes they go down a lot. In 2022, the S&P 500 dropped about 18% over the course of a year. And that's uncomfortable to watch, but investors who stayed in and kept contributing recovered those losses and want to see a significant gain in the years that followed. The key principle here is time horizon. If you are investing money you will not need for 5, 10, or 20 years, short-term drops in the market are not a problem. They are actually opportunities to buy shares at lower prices. And that's why having that emergency fund in place before you start investing is so important. Using Public.com's tools to invest smarter. So let's talk about a few tools inside of Public.com that makes the investing process easier. First is the Alpha AI tool. This is one of the most underrated features on their platform. So if you're on your portfolio, all you got to do is make your way to the left-hand side right here, and you can see all the different tools that you have. Then you'll go to Ask Alpha, okay? And that's their Alpha AI tool. It's free for all users, and you can see how easy it was to navigate to it. So let's go ahead and try that out. So let's see why this stock is moving on a certain day. So we'll go ahead and copy this. Then we'll go to Alpha right here. We'll ask it in the chat, hey Alpha, why is this ETF moving today? Give me a simple breakdown that is easy to understand for a beginner investor. Okay, so let's see what Alpha has for us here. So you'll see it'll scan everything, it'll compile references for you, and then it'll give you a quick summary, and actually a very detailed summary of why. So today, this ETF is moving due to a few key factors. So performance, it has been performing well in 2026 with a year-to-date increase of over 11%, which is actually great, which is notable compared to a flat performance of the broader market index SPY. Sector influence, the ETFs holding in the energy sector have contributed significantly to its performance. Companies in the sector have been doing well, which positively impacts the ETF. SCHD recently delivered its first quarter dividend distribution for 2026, which was 0.2569 per share. This distribution can attract investors looking for income, potentially influencing the ETF's price. These factors combined can lead to increased investor interest and trading activity, affecting the ETF's price. So for beginners who do not know where to start with research, this removes a huge amount of guesswork. Another interesting feature is the social feed. This lets you see what other investors on the platform are buying, and you get to read their reasoning. You can find that down below right here in the latest news section. In order to find this, all you got to do is go to markets, scroll all the way down. Markets is all the way up here. There's also a few different options you can look at right here, but I would go ahead and look at the markets, and then I would scroll all the way down, and then you can go ahead and see the latest news. Now, let me preface, this is not a signal to copy what other people are doing, but it is genuinely a useful way to learn how experienced investors think about the market and discover ideas you might not have found on your own. Now, something else that's cool is the investment plans feature lets you set up automated reoccurring investments into specific stocks or ETFs. You choose the asset, you choose the amount, and you choose the frequency, and Public.com handles the rest. This is how you put dollar cost averaging on autopilot. And the high yield cash account means any money sitting in your account between investments is earning 3.3% APY rather than sitting there idle. So your cash is always working even when it is not invested. A simple starting portfolio for beginners. So if you're brand new and you're not sure where to begin, here is a simple starting point. Put the majority of your initial investment into a broad market ETF. And this is not financial advice, by the way, but something that tracks the S&P 500 or the total US stock market. This gives you instant diversification across hundreds of companies with very low fees. Set up recurring investments so money goes in automatically on a regular schedule. Even $50 or $100 a month adds up significantly over time. Use the Alpha AI tool to research one or two individual stocks you are genuinely interested in. And these should be companies you actually use, understand, and believe in. Start with small individual stocks until you get comfortable with how they move, and let your dividends reinvest automatically. Most platforms, including public.com, allow you to turn on dividend reinvestment, which means any dividends you earn automatically buy more shares. Over time, this compounds your returns significantly. How to get started. The link to open your public.com account is in the description down below. Signing up takes about 10 minutes. There is no minimum deposit required, and you can start investing with as little as $1 through fractional shares. Public.com also currently offers an uncapped 1% match on eligible account transfers. So if you're moving money over from another brokerage and you get 1% of that amount added to your account, just keep in mind the matched funds need to stay in your account for 5 years. With that said, check the link in the description for the full current offer details. That link is an affiliate link, which means we earn a small commission if you sign up through it at no extra cost to you. That is what keeps this channel going and lets us keep making free content just like this. Investing is not complicated, but it does require you to actually start. And the best time to start investing was 10 years ago. The second best time is today. Public.com gives you everything you need to get going. No minimums, no trading fees, fractional shares from $1, and a free AI research tool built right into the app. So check out the link in the description, go open your account, and if this video helped you out, hit that like button and subscribe. That's it from me, Alex, aka your money friend. With that said, I'll see you guys in the next one. Peace.